So the two historic BlackRock-related events that have transpired over the past 90 days has a lot of people confused. Are we about to see the $1 quadrillion derivatives market flood into the Bitcoin space? Or is what just happened in the past couple of days an indication that maybe we're about to see a paper Bitcoin attack waged at Bitcoin through the BlackRock spot Bitcoin ETF? Well, for those who are unaware, this is what happened yesterday. BlackRock's IBIT Bitcoin ETF has been approved to have options trading on top of it. We're going to be talking about what options trading is, but let's not forget what happened earlier in the year. The largest financial derivatives exchange in the world, the CME, has applied to get spot Bitcoin trading. So today we're going to be looking at why this is so significant. We're going to be talking about what derivatives are and just how big the derivatives market is and why we're seeing all of this action around BlackRock. Why was it only BlackRock, only their IBIT Bitcoin spot ETF that was approved for options trading yesterday? Could be some interesting angles we're going to be exploring in today's video. Let's first explain what derivatives are. So we always show you guys this website here. This visualizes all of the money in the entire world. We always talk about the first kind of, dots on this chart, and that is the $900 trillion of physical wealth. So we always show you guys all of the currency, all of the gold, how much money is on central bank balance sheets, the S&P 500. We look at the global money supply, the stock markets, global debt, the massive $300 trillion real estate market. If we scroll, have a look at how big that is. Global wealth is about 900 trillion, but how big is this market right here? The derivatives market. We never talk about it because it is so big, and Bitcoin has never had access to the derivatives market until now. So let's have a look at just how big the derivatives market is. It's enormous. We can see here the notional value of derivatives is now estimated to be $600 trillion. As the website says, keep scrolling. And there are some even bigger estimates that believe that the derivatives market is actually over $1 quadrillion. That is 1,000 trillion. It's a big number, okay? It's a very, very big number. But let's give you guys a little bit of a background on what derivatives even are, okay? What is so special about the derivatives market? Why are they so complicated? Options trading can be complicated. I always like to show you guys what it looks like. This is why people are so confused when they talk about the derivatives market and options trading. As you can see, if you try to play around in options, it's a little bit wonky, okay? An easy way that I like to explain it to people is it's a little bit like going leverage long or leverage short the price of Bitcoin, okay? Now, there's a little bit of difference in the options world. If you are going leverage long the price of Bitcoin, you're buying something called a call. So what you're doing is you're actually predicting where the price of Bitcoin is going to be in the future. So you can see there's lots of different contracts here, and at the very top, you can predict where the price of Bitcoin is going to be on the 27th of September, 2024, or you can predict where the price of Bitcoin is going to be on the 8th of November, 2024. And there are different strike prices. That is the price that you are predicting the price of Bitcoin will be in the future. So that is a call, okay? You're bullish. You're going essentially leverage long. You're trying to predict where the price of Bitcoin is going to be in the future. And you're doing that by buying an option at a specific strike price. So if you believe Bitcoin is going to be at 100K on the 28th of March, 2025, you're going to buy this option right here, okay? Puts, it's a little bit like going leverage short, okay? If you're buying a put, you're essentially predicting the price of Bitcoin is going to go down in the future. So you buy a put with the strike price of where you believe Bitcoin is going to be on X date. It's a little bit in the weeds, so I don't want to bore you guys with derivatives. The takeaway from the fact that BlackRock now has options trading is Bitcoin potentially now has access to this enormous $1 quadrillion market, the derivatives market. It's massive. It's so big, some people struggle to get estimates on just how big it is. To give you guys some more tangible examples of how big the derivatives market is, This is a really cool little visualization. It's showing you how big the equity market is on the left-hand side. So the yellow box is showing you the underlying market size in trillions. So as you can see, the US equity market's at somewhere around 50 trillion, okay? This might not be the perfect chart, but the numbers are directionally correct. And then have a look at that massive orange bar next to it. That is the derivatives market size that's actually operating on top of the US equity market. Again, it's about 20 times the size of the underlying spot market. And it's the same if you have a look at the commodities on the right-hand side of this chart. You can see the underlying commodities market in yellow. It's pretty small, that underlying spot market. Looks to be less than $15 trillion in size. But have a look at the derivatives market based upon those same spot commodity markets. It's about 150 trillion. So it's about 10 times the size. So that's why I tweeted out BlackRock getting options trading approved is massive because the derivative markets are often 10 to 20 times larger than the underlying spot markets. Okay? They're so big that as soon as the news came out yesterday, Michael Saylor tweeted this out as soon as it dropped. He said, the approval of options for IBIT will accelerate institutional Bitcoin adoption. As we can see, things are beginning to really heat up here. Now, I've got this little tweet thread that might add some more color surrounding what, the approval of options on BlackRock's Bitcoin ETF actually means for Bitcoin. Okay. Now, Neil Jacobs popped this tweet out. Let's read it. So very simply, this is going to bring increased institutional participation. Very simply, the approval of options allows more institutional players such as hedge funds, pension funds, and investment firms to gain exposure to Bitcoin, okay? So the options market is going to allow these entities to hedge and wedge themselves, so to say, okay? And we do know that the hedge funds are already in Bitcoin in a really big way. More than 15 of the top 25 hedge funds in the world already have exposure to Bitcoin, okay? We've talked about that ad nauseum here on the channel. I might actually show you guys a chart for those who may have missed it because it's pretty big. Top. This is the little image I want to show you guys. Is this 16 of the top 25 hedge funds in the world have exposure to Bitcoin? It's an incredible chart for those who have not seen it. Incredible. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 15 of the top hedge funds in the world have massive exposures to Bitcoin. The majority of them have more than 100 coins. It's a multi-billion-dollar exposure to Bitcoin. Let's go back to this tweet thread to kind of explain just how big this could be. So again, takeaway number 1 from Neil's thread: more institutions, more hedge funds, more pension funds getting into Bitcoin. Let's see what else this means for Bitcoin. Liquidity boost. So again, this is going to bring a lot more liquidity into the market. This obviously leans into the angle that we just showed you guys with, talking about how big that, derivatives market is around the world. It's incredibly big. Takeaway number 3, price discovery. So options trading is going to help price discovery. Okay, so we're going to see more longs, more shorts. This is going to attract a broader range of capital that's going to reduce speculative spikes. That's what Neil believes, or whoever wrote this tweet thread. We can see number 4, the 4th takeaway Neil has. Now, again, I disagree. I disagree with the fact that it's going to decrease spikes in Bitcoin. I think it's actually going to, everything we're seeing, I believe, is only going to increase volatility in the near future. And I think that's a very unpopular opinion. A lot of people think, oh, the ETFs are dampening volatility. Sure, if you look at the data over the past 4 years, Bitcoin's becoming less volatile. I say, past performance isn't indicative of future performance. That's all I'm going to say. Be prepared for all scenarios. Mainstream adoption signal. Okay, so obviously this is massive for mainstream adoption. We now have the world's largest derivatives exchange in the world adopting and welcoming Bitcoin, and we have the world's largest asset manager with options on their Bitcoin ETFs. Fifth takeaway, diversified financial products. Okay, so I don't know how you could be bearish on this. This is massive, and we've been slowly seeing signs that we would get something like this. We've been seeing little Easter eggs dropped all year, so to say, that we may be getting Bitcoin options. NASDAQ came out in August, literally 3 weeks ago, and said they had plans for spot Bitcoin options. This complements the existing CME options, which are linked to Bitcoin futures. So again, I don't need to tell you guys that the NASDAQ is a pretty big deal. The NASDAQ is an incredibly big deal. And I do find it very interesting about the timing. I want to show you guys the headline of this article right here. CME to launch first weekly Bitcoin futures trading on September 30th. What date is it today, guys? September 21st. All of these ducks are beginning to get in a row and start quacking, so to say. Now, I do want to talk a little bit more about CME, and I do want to answer some really good questions. We've talked a lot about one of the things I mentioned in the introduction. How big is the derivatives market? Is this going to bring $1 trillion of capital into the Bitcoin space? We've talked a lot about that. We haven't talked about paper Bitcoin, or what Michael is asking us in the chat. Won't this allow for more price manipulation? Great question. We're going to be answering that question. Before we do, wanted to give a quick shout out to obviously our massive flagship sponsor over here on the Bitcoin News YouTube channel. That is, of course, Rhino Bitcoin. I mean, there's so much talk about the Bitcoin ETFs right now. I'm guilty of it. We're talking about the Bitcoin ETFs on the channel, but I always want to remind you guys, use Bitcoin the way it was supposed to be used. Okay, you can do that with these all-in-one Bitcoin super applications like Rhino Bitcoin. You can buy Bitcoin on Rhino. You can sell Bitcoin on Rhino. You can even withdraw Bitcoin from Rhino to a Lightning wallet with Rhino. And you can even play around with multi-signature setups. You can connect to Casa for multi-signature support, all in the one application. That is all done within Rhino. Okay, as you guys can see, they've got a really cool application. They have all sorts of different things you can do on the app. This is what I like most about Rhino. The Rhino debit card is coming soon. Something else that's coming soon is the ability to borrow money. Of course, Rhino is combining, traditional financial products with Bitcoin. Okay, so you can borrow Bitcoin on Rhino in the very near future, which is going to be really interesting, really big. Might even make me consider buying some real estate in the near future if I'm able to borrow against my Bitcoin. I'll never be selling my Bitcoin for real estate. You guys know that on the channel. But anyway, check out what Rhino is doing. Everything you need to know about Rhino is going to be linked in the live chat. It's also going to be linked down below. So check out what they are building and what they are doing. Now let's talk about that question. Paper Bitcoin. Will this allow for more manipulation in the Bitcoin price? Well, let's talk about that. Obviously, everything potentially has the possibility of, allowing for paper Bitcoin. I mean, the institutions of the world, they're still very fiat-minded. I don't know if BlackRock's fully orange-pilled. I really don't know. I mean, they're not publishing their Bitcoin addresses publicly. There's only one Bitcoin ETF actually doing proof of reserves. I believe that's Bitwise. The rest of them, there's a little bit more uncertainty surrounding them. Some people post to Twitter and they say, look, I believe this address, and this address belong to BlackRock. I think they have at least some Bitcoin. We've seen that. We've seen some on-chain analysts try to coordinate, track, and assign the Bitcoin balances to BlackRock and these other ETFs. And that's great. It's really cool. But why don't they just come out and publish proof of reserves? It's a question for you guys. Why not? I mean, it doesn't hurt their brand. If anything, it makes them more trusted. If they say, these are the Bitcoin we own, the BlackRock shares, the IBIT shares that you own that are supposed to be backed by Bitcoin, guess what? They're backed by Bitcoin. Why is it so hard to do that? Why is there been so much hesitancy from these other Bitcoin ETFs to come out and do that and do proof of reserves? Just a question. So will derivatives allow more price manipulation on Bitcoin? Potentially. But again, I'm not concerned about paper Bitcoin because Bitcoin's so easy to take self-custody of. You can instantly go straight to your exchange, whatever exchange you use, whether it's Coinbase, Swan, whatever exchange, Kraken, Gemini, you can withdraw your Bitcoin. And we can see on-chain how much Bitcoin these exchanges own. What else we can see on-chain is that if the trend over the past 4 years of data continues, those exchanges are going to have 0 Bitcoin by 2028. I believe that is when we're going to find out what is the real price of Bitcoin. So in the interim, between here and there, maybe we're going to see more manipulation. I find it interesting that Coinbase has just lost about 60 to 70% of their Bitcoin on their exchange over the past 4 years. And just recently, they came out with a new Bitcoin-backed token on their blockchain, CBBTC. So everybody knows about wrapped Bitcoin on Ethereum. It's like an ERC token that's supposed to hold Bitcoin in it. Now Coinbase is coming out with its kind of equivalent, CBBTC. And they have no obligation to show the reserves that they're supposedly holding on. That token's supposed to be backed 1-for-1 with Bitcoin. BlackRock hiding their reserves is just another lever they can use to manipulate price. In the short term, of course, that's a possibility. I'm not ruling that out. In the long term, we're going to see who's swimming naked. I believe 2028 is going to be the year where we're going to see who is swimming naked. I tend to agree with that comment. BlackRock crossed to the dark side a long time ago. Maybe Larry Fing's coming around. He's done a hell of a Bitcoin backflip. He's dumped ESG. He said he doesn't want to be associated with ESG. He's thrown that baby out with the bathwater. I think there is a lot of suspense right now waiting for the price of Bitcoin to go up. Dan, one of our favorites here on the channel, says last night's report showed September is typically followed by October and November. Great insights. That's funny. Let's give you guys some a little bit of context surrounding what typically happens in October, November, and December if we have a bullish September. Because it's pretty interesting. It's pretty bullish. Here's the tweet. So every single time you've had a green September by this chart here, you can see that we've had a green October, November, and December. So we all know that Bitcoin behaves very well in Q4, October, November, December, irrespective of what happens in September. But the 3 times that we've had green Septembers between 2013 and 2024, we've seen green October, November, Decembers. Okay. So again, I really don't think it's a coincidence we're seeing all of this news come out about BlackRock now. Why did BlackRock release that 9-page research report 2 days ago? Why? Why now? A lot of people think, oh, Bitcoin's topped, it's all over. Recession coming. The Fed's cutting interest rates. They're pivoting. This is bad. Historically, everybody's looking at these old models of the world and projecting those forward. But I think it's fascinating that all in the past week, we've had BlackRock Bitcoin ETF approved for options trading. We've seen this article here come out of Forbes. BlackRock reveals it's quietly preparing for a $35 trillion Federal Reserve dollar crisis, with Bitcoin predicted to spark a sudden price boom. Why is BlackRock releasing these 9-page research reports calling Bitcoin a unique diversifier? Why now? Why are they putting in all this work right now? Just speculating, guys, just questions. Just reminding you that right now, everybody has been put to sleep with the Bitcoin price. Oh, Bitcoin's going sideways. It's a stable coin. It's been trading between 58K and 70K for 6 months now. Again, Bitcoin's best returns typically come in 12 days every single year. And they typically happen when most people have sold, they're bored, and they're not even paying attention. With all that said, guys, thank you so much to everyone who tuned in. Hope you enjoyed this video. If you did, smash the like button. We'd appreciate that. And stay tuned to the Bitcoin Signal because we think things are really heating up here heading into Q4 2024.